All right, let's get started. So today's topic will be crypto trading, short-term, long-term, with supply and demand as the market timing strategy. First of all, though, what does everybody trade? What markets is everyone trading who is with us here today? And as you answer that real quick, if you want more information than we're going to have time to go over, there is a free workshop you can attend. I do some of these. Those ones on the right would be most appropriate if you have experience. And the next one there is Wednesday. There's a link in the chat if you like. If we go over enough information during our session here today, great. But if you want more information, then there's those workshops. All right. So let's dive in. And again, we're going to talk about supply, demand, market timing with the crypto markets. Is anybody here with us trade crypto? If not, or you're thinking about it, that's okay too. Okay. All right. So make sure you understand we are not investment advisors. And of course, there is no guarantee of success when it comes to trading. I recently did a couple of YouTube sessions on this topic because the reality is available research suggests that most active traders, most day traders lose money. So that's a very big deal. And if you think this is a big issue, which it is, it doesn't get any easier for people typically when it comes to crypto trading, right? We'll talk more about that in a bit. So no one's pushing anyone to trade their own accounts, risk their hard-earned money in the markets. But if you do, make sure you've hopefully proven to yourself that you know what you're doing. Certainly make sure that you understand the risk and are okay with the risk and all that. But just be aware, it's a dangerous place when it comes to money. All right? It can be very risky, and crypto just kind of can take it to the next level, that risk. Okay. As for me, I saw, someone pointed out a couple comments over the past week or so suggesting that I'm not a fan of crypto or something like that. I'll give you a little bit of history there. So if you watch any of my sessions, I primarily focus on strategy. The market is really irrelevant. We apply our supply-demand strategy rules to any market, including crypto, and we're going to go over that here in detail in a moment. My involvement, because I know there's some questions about that in crypto, I've never been a big fan of crypto. I've never been big against it. I was like many people, I saw crypto creep up years ago. I actually, when Bitcoin first came out, I started buying crypto, Bitcoin, back in December 2017. Like a lot of people, I just put it on the weekly recurring buy for, I want to say a couple years. It was about a couple years, year and a half, maybe a couple years. Anyway, and then just held on to it. I think some of you may have done that also. But I got out of almost all of it May of last year. So, in the beginning, I didn't have much of an opinion either way. But so as far as my activity in crypto, I've done a little bit more than this, not much more. Less than 5 full trades, I believe, in crypto. But but do we chart crypto? I spend most of my trading is done in the equity index options, ETFs. So, but anyway, this is it's been an interesting ride in crypto. And the one thing you have to realize too, getting involved in crypto, and probably not telling anything you don't know. There's a lot of horror stories out there. A lot of people have lost a ton of money. Some people have made a lot of money. So just make sure you know what you're getting involved in. When it comes to where to buy and sell in the crypto markets or any market, that is the focus of our piece today. So we're going to spend a few minutes learning here about supply, demand, strategy, all that, and then we're going to dive into, I'll take you there real quick, we're going to dive into the live crypto markets. So I have an algorithm. This is an automated supply demand tool that plots supply demand zones on any market, any asset class, but today we'll focus on these crypto markets. Okay, here are some very active day trading time frames, and then we'll also look at some larger swing trading time frames for crypto. Make sense? So let's learn first, and then we'll apply what we're learning to these live markets as they're moving. As we go along, time permitting, we can look at any market you want to look at, but let's dive in to strategy first. Okay, so let's do that. All right, now everything we're going to, if you have any questions or comments, feel free to ask in the chat. First, a quick review of how and why prices move and turn in markets, right? Obviously, it's all about supply and demand. Nobody owns supply and demand. Supply and demand has been around forever. I'm just sharing with you, what it looks like on a price chart. So a lot of people talk about supply demand these days, but they don't talk about the middle, which is equally important as supply and demand, right? And remember, behind the scenes in the crypto markets, it's still people pushing buy and sell buttons, right? So the way we apply our supply demand analysis rules strategy to the S&P, to buying and selling cars and houses, to buying and selling the NASDAQ or the yen or the dollar or Bitcoin or Ethereum or any of these, it's the same thing, right? And you can basically chart almost any crypto market, and as long as there's enough activity, we chart everything the same way, right? It's all just people pushing the buy and sell buttons. What the product or widget is doesn't matter. All right, let's get back to the charts here. So fair value is where the majority of buyers and sellers agree to buy and sell in a market, right? We're talking about the financial markets today, we're talking about the crypto markets, but we could be talking about any markets. Fair value, again, is where the majority of buyers and sellers agree to buy and sell. Therefore, it has this natural effect of pulling price back to it. Remember, when you go to the store to buy food, for example, I don't know, maybe you're buying ice cream, and normally the ice cream is, and we'll talk in dollars here, I don't know, more, maybe the container of ice cream that you love to buy is $4 for the container. Well, the store, I'm sure, would love to sell it for $10, but not enough people would buy it for $10. So we wouldn't have, the store wouldn't make any money, and we wouldn't get our ice cream, right? So that wouldn't work. We would probably love to buy that ice cream for $1. But again, the store wouldn't make any money, so they wouldn't be in business, and it'd be harder for us to buy the ice cream. So we all agree to buy and sell somewhere in the middle. Does that make sense? That's what fair value is. Fair value works exactly the same in the financial markets, exactly the same in financial markets, crypto markets, you name it. Good question in the chat there, the meme cryptos. I'm not going to have probably any more information on that than the average person. However, do I have people around me that I've seen make good money in Dogecoin and Shiba? I believe I actually own a little Shiba now, the last time I looked at my Coinbase account. Yeah, I've seen people make money in those. I've seen people lose a lot of money in those. And then there's the new one that seems to be pretty popular now, which is Volt Inu, right? There's another one. So I don't know enough about these to, comment on them. But you just have to be careful, very careful. But I don't want to really comment on the memes too much. I mean, again, I think we all know people that have made a lot of money, lost a lot of money, and maybe more that have lost a lot of money. So again, just be very, very careful. At this point, it's probably not a good idea to put money that's very important to you in these types of markets, or think of trading these markets as a career, right? At this point. So that is an extremely risky thing to do, and the odds are certainly not stacked in your favor. Let's take a look. We'll take a look at the S&P in a bit. All right, back to this. So fair value is where the majority agree to buy and sell, which naturally pulls price back to it. Sometimes something happens where a lot of buyers come in the market, pushes price higher to price levels where supply greatly exceeds demand. Okay, what happens there is competition to sell at supply naturally pushes price lower. Okay, same thing, I don't know, a couple weeks ago, maybe a week and a half ago, the CPI number came out in the United States, measure of inflation. It was not a good number. The market, fell really hard, gapped open right into a qualified demand zone. I'm actually going to show you that in a few minutes. And competition to buy at that demand zone, which is what demand is, right, pushes price higher. So there's always this governing dynamic at play with supply, demand, and fair value of push and pull. Does that make sense? And it's all about those significant unfilled orders out at the supply-demand extremes. That is how and why prices turn and move in any market. Now, if you understand that, the next question is, what does that picture look like on a price chart? Let's start with fair value. Fair value has two characteristics that typically help identify it. Number one, where's the majority of trading activity? Which clearly this picture represents a lot of trading activity here. Number two, where is that wide and whippy trading activity? All right, notice how easy it is for price to move up and down through this area here. Why is that? The reason why price moves up and down so easily here and we get so much trading is because there's a lack of a significant supply-demand imbalance. That big stack of unfilled orders that cause prices to turn is missing inside here. You can buy and sell as much as you want in here. You don't have a big imbalance. And those are the two characters, and that's what fair value is, right? So if any of you have experienced, maybe looking at two demand zones that look identical, two supply zones that look identical, one works perfect, the other one doesn't, and you're scratching your head thinking, what in the world is the difference? These are identical. Well, it's probably that the ones that didn't work were probably in the middle. What we do is we first identify fair value, then we look above fair value for our qualified supply zone and below fair value for our qualified demand zone. Now we don't, how do I kind of identify all this beyond what I just said? We focus on two rules, two pillars, not like 8 steps or 15 steps or 20 steps. 2 pillars, structure and location, right? Once we find a supply or demand zone, for example, we focus on location first, right? We identify fair value, then we look above it for our qualified supply zone and below it for our qualified demand zone. When I say qualified, I mean that it meets the structure criteria that we're looking for, right? There are 4 things that have to be present for structure. If we don't have those, we don't have a zone. Okay, and when we have one, where is it? Is it inside fair value? If it is, we typically ignore it. If it's outside fair value, typically it's good to go. The same if all we're talking about today is crypto, which is the focus, we're having the same conversation. Does that make sense? Okay. Now, because fair value is where the majority agree to buy and sell, fair value is the natural magnet for price. Does that make sense? Let's take a look at that CPI example from, I believe, I don't know, a couple weeks. What's the date today? So back on the 10th, whenever that was. So notice, here's a screenshot of one of our live sessions with our members. Notice up here, this area here is this. Here is that recent and relevant fair value. Remember the two characteristics. Where's the majority of trading activity? Where's that wide and whippy trading activity? It's right here. Sitting below it, we have a qualified demand zone. Okay. The bad number comes out, price gaps down. This is the S&P, right into our qualified demand zone. Competition to buy at demand causes it to turn and pushes it higher. Fair value, which is where the majority agree to buy and sell, pulls price right back to it. Does that make sense? And again, I know we're looking at charts and this is trading and crypto and all this stuff, but keep in mind when it comes to supply, demand, fair value, what it looks like on a price chart in any market, you know, if I were delivering a economics 101 class at a university, I would literally be having the exact same conversation, right? We're not talking here about there's no crystal ball or fancy this or fancy that. This is just pure supply and demand, what it looks like on the price charts. Does that make sense? Okay. All right. Let's take this a little step further because the key is location. One of the things we do too that may be new for some of you, because there's a lot, there's some of this stuff that we just, obviously can't talk about on YouTube or can't talk about it, in some of these FX Street sessions because it just wouldn't be fair to us and our members, right? But I want to share something else here that may help. Most people, when they are doing their risk-reward analysis or calculations, most people do that from demand to supply or supply to demand, right? Most people do that. What you may want to consider is also doing that risk-reward analysis just back to fair value. If you look at this example, this opportunity here, this opportunity was offering, I'm just eyeballing it, but it looks like about 2 to 1 just back to fair value, right? We'd all love, I think most of us would like a 5 to 1 opportunity, right? Well, wouldn't it be nice to identify an opportunity that offered us 5 to 1 for price just to get back to fair value, right? Typically, if you think about it, in theory, that's a higher probability opportunity. So the further our supply demand zones are away from fair value, the better. Now the challenge is, it takes some news for price to get down or way out to those levels. Okay, happened yesterday with the whole Russia-Ukraine thing, right? Happened again. We went way down to those deep discount demand zones and quickly price shoots right back to fair value. Here's Apple. Let's see here. Looking back, let's see what you're saying in the chat. Isn't this demand zone is just above that, below that fair value? The way that we do it now, so we look at where the demand zone, right? When price left the demand zone to the time price came back, where's that recent and relevant fair value? Okay, and this demand zone has the 4 criteria that we're looking for, and that's very important. But let's look at this one. Speaking of the whole, Russia-Ukraine thing, this is yesterday's gap down in Apple. Okay, but back when we were looking at Apple, what I want to point out though is the demand zone here. While it certainly qualifies as far as structure, okay, notice location-wise, it's below all of this. Okay. Some people may look at this and say, oh, wait a minute, there's a perfect, look at that demand zone there. Rally, base, rally with a gap. Rally, base, rally. Rally, base, rally. Most rally, base, rallies and drop, base, drops are going to fail. Okay, you have to focus, on where they're at location-wise. So, and does that mean that this one or any supplier demand zone is guaranteed to work? No, like we said in the beginning, of course, at the end of the day, all of this is a guess, right? We just want to make the most educated guess that we possibly can, having this razor sharp focus on what's real, not what we feel. So notice the location of the demand zone here. It's below all of this. The likelihood that there is a significant supply and demand imbalance inside here is very low. How can we what evidence is telling us that? Well, the fact that price moves up and down so easily through here tells us that there's not likely to be a big supply-demand imbalance in here. If there was, price would not move so easily move up and down in here. Does that make sense? So we go below that for our qualified demand zone, which happened to be the low back here. Then up here, Apple announces good earnings. A lot of more people come in and buy. And then yesterday, we had a big gap down after a drop in price right into this general area of our qualified demand zones. And you can see quickly price just moves right back up to here. But the main point here is just structure, location, and it's important that we go over this as we get into, we're going to go to the live charts and the crypto markets next. Okay, so let's learn and then let's apply what we're learning live to the crypto markets. Here we have a very qualified rally base drop with a gap. Okay, and notice location-wise, this supply zone here, the rally base drop supply zone, is sitting above this and above that. Okay, the fact that this is here and this is here suggests that price is not only likely to turn lower at supply, but be pulled back to these areas. Because at the time, that's where the majority agree to buy and sell. And you could see for the next few days, right, price ended up staying in this area a little bit, and then of course moved quickly down to this next area of demand. This is the cues we're looking at here. And I know we're only spending a few minutes on this. This is a much obviously bigger, more robust lesson, this whole concept of structure location. But I thought it was important to get into this before we go into the live markets and talk crypto, because structure location is equally important there. Okay? All right, let's get into the markets here. And it looks like Bitcoin just came down to a qualified demand zone there. But let's before we even start, all of these supply demand zones you see here, these are all automated. So we have an algorithm that finds the supply demand zones for us. We use, I have multiple time frames. This is more of a swing trading type workspace here. This right here would be more of a very active short-term trading workspace. We can look at this for a few minutes because we might get some more activity here. Okay. And if we look at, it doesn't matter. We can go to Bitcoin. Well, let's go up here. So let's go to Bitcoin. And these time frames don't matter. They don't matter. So we can look. I don't know. Let's blow this one up a little bit. Any of these really. And if you have a market you want to look at, I certainly don't have to stay on the crypto markets. This is just a little 2-minute chart. I would not suggest very short-term trading the crypto markets. You can, but I don't. I don't know of many people that make any money short-term trading the crypto markets. Not saying they're not out there, but yeah. So just be careful. But anyway, we'll be able to see this, on the small time frames in real time. Anyway, here's a little demand zone here. Notice the majority of trading at the moment is up here, right? So the likelihood is if price does come down to the demand zone, it should quickly end up back up here for a little bit, right? We always apply our risk management rules to all this to make sure we never have more money at risk than we're willing to lose. So there's that one. Let's blow up this time frame right here. Just want to see, I thought we had something above there. A little bit lower below all that is a higher probability demand zone here. Looking at a little bigger time frame. This is just, bigger time frame. It's still a 5-minute chart of Bitcoin. But we have this zone here, and then notice this one is below all of this. Okay, so price almost got down there, but didn't. That suggests there's likely to be a pretty good supply-demand imbalance in here. But the higher probability zone is going to be this one simply because it's below all of this, right? Don't forget about location. Location is key. Supplier demand zones that we take inside of fair value, typically we reduce position size. Okay. And there's that one. If we go back here to more of the swing trading time frame, oh yeah, we can look at the S&P. We can look at, sure, we can look at those. JB, good question. The algo we're doing ourselves. It's for us. It's always a combination. The algo makes things does things obviously much faster and has no opinion or emotion, right? Its opinion is based on the rules that its brain, it has its own brain, right? So it definitely speeds things up, but we always look over things as well. Okay. And let me just look back here in the chat. Good question, Andre. Why options instead of futures for me? It's, I guess the answer would be, I mean, I'm struggling with an answer, not because I don't have the answer, just because I could literally speak all day about this topic. It's such an important topic to me. But let me just give you one part of the answer. When it comes to the pricing of options, right? All the pricing of options at all the different strikes, and you have all these, fancy pricing models, all this heavy math going into all these pricing models, and people using that to make their buy-sell decisions in options. All of the calculations and considerations that go into people's buy and sell decisions and options. The one thing that the vast majority of the market does not consider, the one thing that is not considered in all those pricing models is what? Supply and demand, right? Because of that, there's, to me anyway, it just speaks to fantastic opportunity if you know what you're doing. Does that make sense? Okay. So, and you have there's a lot of wiggle room there too when it comes to options. Grace, good comment there. Human emotions is the hardest thing to predict. I would actually say that a little bit different, not disagreeing with you, but I don't know. I mean, human emotion seems, I don't know, I don't know that it's that hard to predict. I mean, most people are pretty predictable, right? But it's certainly hard as a human to fight that emotion. It's hard for a human to act as a robot. Any time frame, Barack, is in other words, there's not one time frame that's more important or better than another. These are all just different time frames. It's the same reason that a radiologist looks at multiple pictures when it comes to, or multiple images when it comes to an X-ray or an MRI. All those images look different, yet they're all the same body part. They're just different angles to try to pinpoint what the issue is. That's exactly why we use different time frames. But it's not like there's one time frame that's better than another. All right, let's focus on the charts here. So we've been looking at Bitcoin. Let's go to Ethereum here. And it looks like we just came into these larger time frame supply zones. Let's see what the other charts have here. Yeah, Grace, as a human, it's easy to say, oh, I'm going to be different than other humans. I'm going to be able to control my emotions. A lot easier said than done, which is one of the big reasons why, I know for me and our team here, we're extremely focused on rules for everything. Not a lot of rules, but every decision must have a rule. So one of the ways that, to answer kind of your question there, Lucas, structure and location, right? Structure and location. staying out of that middle. We don't want to do much buying and selling in the middle. That's not where the odds are stacked in our favor. Grace, that's a great question too, and the reason is, an algorithm is just, all an algorithm is programming what's in someone's head. So we see that most traders fail, most strategies are very faulty. Therefore, most algorithms are going to be, well, let me say this. There's two types of algorithms, right? There's more than two, but let's talk about the two big ones. An algorithm designed to predict market turns and market moves, yeah, the majority of those are going to be faulty and probably not going to work. And a very different kind of algorithm that many hedge funds use, many big banks and financial institutions use, has nothing to do with predicting market turning points, right? For example, many big banks buy order flow from retail brokers, right? That's how they make their money. The retail broker makes their money from payment for order flow. That order flow is then routed through the financial institution, and they have sophisticated algorithms that allow them in an instant to mark each order up, right? Mark each order up and lock in that profit. Does that make sense? That's also an algorithm. But that's an algorithm where it's nearly impossible to lose money, right? Because you get, an order comes in, your algorithm immediately marks it up for a profit and executes the order. See what I'm saying? Discipline is certainly the key, JB, certainly the key. Okay, let's, great questions, great conversation, but I know we always run out of time, so let's get back on the charts here. All right, let's just take a look at this one here. Here's a supply zone. I can blow this chart up a little bit here. And when I do that, so the key thing here is this supply zone is above all of this, okay? And location-wise, that's very, very important. On small time frames, you might find supply zones in here, maybe even up here, but we want to get above all this. So location-wise, this is key. Okay, and that's looking at that big 4-hour chart right there. If I go over here, I just wanted to see what's below all this. So, okay, we got this stuff here. Right, so location-wise, that's key for that one. Now, on this platform, we're pretty much only getting data for, maybe 3 or 4 cryptos. I only have 2 up here, Bitcoin and Ethereum. But you can go to other websites and chart, tons and tons. There's tons of cryptos out here now. It's funny, when I first opened up my Coinbase account, don't quote me on this, but I think there were like maybe 4 or 5 cryptos at most. I want to say 4. Now it's like endless. There's, tons of cryptos and more coming every week, right? But my point is, you can chart these on other platforms, okay? And you can find, free charts on just about any decent sized crypto these days. Right, so the main purpose of what we're going over here today, though, is to focus on strategy and show you how to apply it to the crypto markets. But all these rules and thoughts, go for any market. Let's go back to the smaller time frame here because we'll get a lot more activity in a short period of time, right? Bitcoin is trying to come down here. We'll see if it can. So we'll leave that one alone for now. Why don't we go to another market, as that is this is just a 2-minute chart. So, this can happen extremely fast. And the nice thing is, if Bitcoin comes down to here, turns higher, our profit target is either back to fair value or to just before the opposing supply zone. And again, any trade that does not work out, we want to get out for a very small loss just before the zone. But we'll let this one play out. And in the meantime, let's go back to the other workspace, and I can look at some of those markets and charts that you wanted to look at. I think someone said the S&P. That is not a problem. We can go over to the S&P. I assume you want the S&P futures. We can also look at SPY. So we gave this zone, we went over this zone this morning. So the S&P left a footprint of demand down here. So we would expect price to come down here in the near future. There's yesterday's, I'm sorry, that's not yesterday's low, but yeah, no, that, okay. Oh yeah, no, that is yesterday's low. Sorry, I'm like, wait a second, it's got to be. All right, it is. Anyway, during yesterday's rally, we left a footprint of demand down here, sitting just below 4,200. Okay, so there it is. And the supply against that is going to be quite a bit higher. In fact, the last drop came from, this our supply zone up here. This is a good one to look at too, because at the time, fair value was down here, right? When price came back to the supply zone, this is where the majority of trading was, that wide and whippy trading was. So the expectation was that price would come down here. Below this, there's really nothing to stop prices from falling down to that, yesterday's low, where obviously there's a bunch of demands on there. So that's where the next supplies demand zone is, down there. And the S&P doesn't show supply here, but let me take you over to, I believe it's the Qs, because you're probably wondering where supply likely is at the moment. And I believe price has been just sitting at a supply zone. Oh no, we're not there yet. Sorry. Not there yet. I thought we were there, but we're not. So while the S&P has that little demand zone sitting below, the NASDAQ has it too. But we see the next likely stopping point for the NASDAQ is going to be this area right up here, the 348.30. Make sense? And as I click through these, please focus on location. I can't explain enough how important location is. And if you really want to understand it deeper, just think about the price of anything out there. It doesn't have to be the financial markets. It's all supply, demand, and fair value, right? Anytime in any market price gets away from fair value, even oil, right? Oil's a good example now. It's way up there. It'll come back. Supply and demand works itself out, right? Okay. And again, it's not just some phenomenon or something. It's just economics 101. With oil being so expensive relative to its recent and relevant fair value, right? What's going to bring prices down? Well, more oil, right? So now you're starting to hear in the news, what can the U.S. do to free up more oil? Start pumping more oil. You're starting to hear other countries, what can we do to start pumping more oil? They wouldn't be saying that if oil was half the price it is now, right? So these attractive prices up here for oil sellers or producers, okay, bring in more sellers and producers. The more oil that's produced, now they're competing to sell oil at these prices. That competition to sell pushes price back down. All we're going over today is what that looks like on a price chart. Make sense? All right. Yep, we can certainly take a look at gold. Assuming you want the gold futures, so let me go back to that. Okay. Here's gold. Just came up to the supply zone there yesterday. Let's see. Let me blow this up so we can look at possibly some demand below. I know there's one down there. There's one. Still a little bit lower, not too far. This demand zone below comes in right around 1860. So we're sitting about 1890 at the moment. So, the next range in the current range in gold is likely to be between our supply zone up here, the 1921 or so, and the 1860 below. Okay. Oh, I'm sorry. You said gold spot. It's going to be the same as like GLD and ETF and all that, they're going to be, the zones are pretty much the same. We go over those, every day. All right, on that note, let me go back here. So like I said before, tried to cover a lot of information today focused on crypto. And really the theme is if you're going to trade crypto, there's that link in the chat. If you want more information, you can always register for one of these free workshops. They're free, but we certainly dive deeper into structure and location. We have a little more time. But the focus of today is two things. Number one, understand that crypto trading in general is extremely risky, so be careful. Number two, how and why prices move in cryptocurrencies is exactly how and why prices move in other markets. It's all supply and demand. Why? Because there's still people behind the scenes making buy and sell decisions. That's what doesn't change. The product, the widget changes, but the buy and sell decisions that people are making don't, and that's all because of supply and demand, right? And then I wanted to spend time talking about the whole concept of, how does this all work, meaning structure and location. The purpose of location, be very careful in or close to fair value when it comes to pushing the buy or sell button. All right, on that note, good to spend time. Have a great rest of your day, and we'll see you again at some point. All right.